Welcome to The Mountain Pass, a podcast about lifelong learning, curiosity, and our wonderful brain. Topics we love at Alp Audio. But this isn't a podcast about Alp the product. Rather, it's conversations driven by our curiosity. Today, I'm interviewing Alex Oppenheimer, founder at Verissimo Ventures, an early-stage venture fund. Alex has been involved in the financial world since he traded stocks in the 90s as a preteen and was part of the team that took Facebook public at Morgan Stanley a decade later. I wanted to chat with Alex about his learning journey in investing, the lessons he's learned along the way, what a degree in mechanical engineering has to do with investing, and what his thoughts are in general about learning experiences, what matters and what doesn't. Alex has spent a good chunk of time in completely different learning environments, whether internships, summer jobs, college, or yeshiva, what I'll call a form of higher education for Jewish religious studies. And in retrospect, that has formed his opinion on all of his previous learning experiences. Enjoy. Alex, welcome to the Mountain Pass. It's great to have you here. And I wanted to have you on and just dive into your background first, because you've done a lot of different things, most of them actually in the past few years in finance, but you started out as an engineering student at Stanford. And I just wanted to start with your background, where you're coming from, what are you at now? And that will kind of guide our conversation into your journey, your learning and lifelong learning journey.
Sounds great. So I guess to jump in on my background and my story, I grew up in Marin County, just north of San Francisco, in and around Silicon Valley stuff. My dad works in finance. He also was a trained engineer, and he likes to remind me that he actually was an engineer, unlike me. I just say, hey, I skipped some steps. It's okay. But we both studied mechanical engineering. And one of the cool things about it is actually fundamentally what you learn in mechanical engineering hasn't changed that much from the 70s until today, because it's a professional engineering degree that has the same required classes pretty much across the board, which is kind of cool. Yeah, I grew up, doing a mix of tinkering, taking stuff apart, putting stuff together, and also picking stocks and learning about finance from my dad, and that kind of.
I have to stop you right there on the picking stocks. I actually also picked stocks as a little kid, and I'm really curious how you did it. Like, what was your MO? Did you go through the newspaper and kind of highlight the ones you were looking for? Why did you choose which ones? How did you track them? Because this was back in the 90s, right?
Yeah. So there was really like two methods, and it's kind of hilarious to think back on how little I understood, which I give myself some credit because I was like 10. But at the same time, the fundamentals of my approach were actually good. I'm not going to lie, like, because, and the reason why I say that is I've just come to realize that, like, simpler is better. And so the way that I picked stocks, I was really doing two things. One, I was picking, big public names. I remember I was in Motorola and Disney and GE and like a few others that I just kind of knew about and like thought they were doing interesting things as companies, and I liked their products, McDonald's, whatever, and brands that I knew. And then the other thing I was doing was picking IPOs. There was a website called Red Herring that would like rank IPOs and like how hot they were when they were going out in like, 99, 2000. And so I'd go on there and I'd like look at what was hot and like look at what the company did. And sometimes I was like, I have no idea what that means, but like, it sounds cool. I remember there was like a hardware networking company that I picked that was like random and it did extremely well. And I kind of rode that for a while. But
was this actual money, or was this paper profits?
No, this was real money.
Wow.
And then, to be honest, I like in 2001, 2002, like it just wasn't fun anymore. Right. Like,
bear
and,
markets.
you know, in hindsight, again, I was a little kid basically, you know, and in hindsight, you know, it's when others are fearful, be greedy, and when others are greedy, be fearful. I think that always applies, and you have to figure out the right way to make it apply and really understand what's going on. And I frankly, I got discouraged. It just was, again, it wasn't fun. And I think there's something to that. Fast forward a few years, and my first job ever, I don't know if this is embarrassing or cool or somewhere in between, but my first job ever was at $100 million small cap technology focused hedge fund. And I was 16 years old, and I was commuting to San Francisco and working at this hedge fund. And it was honestly an amazing learning experience, because there were two principals in the fund and then two analysts who were, you know, post investment banking. They were, you know, almost 10 years older than I was at the time. I mean, they still are, but you know, and I just learned, like, here's all of this research you can do that's not that hard, that's not proprietary. I was literally like, they would send me to department stores, because they also did some retail stuff. And they'd be like, look at this brand and like where are they placed in like Macy's and Nordstrom and Bloomingdale's, and, you know, are they in the front, are they in the back, like, you know, these sort of things. I was just doing it, and it opened up my mind into like, how do you ask good questions and how do you do good research? And I kind of, for a long time, would tell people, like, I learned how to Google that summer, because I remember we also looked at, like, you know, we looked at companies that made fake like decking, so like plastic and like poly fiber like wood effectively for decks. And again, it was just searching around, figuring out who's doing what, you know, who looks good, who seems to be doing better than others, what are the differentiation in the products. And it kind of, you know, it's like just the basics. And that the next part, though, is what's, you know, taking me a lot longer to learn, is like, how do you develop, you know, understanding the motions to get the right information, and then developing the muscles to like know when to pull the trigger. Like, you always have to make a decision. Sometimes the decision is to not make a decision, and whether it's either to hold or to like not buy something new. But you know, how do you then process that information to develop conviction to make a move? So I did that, and then I actually my next job was at a corporate law firm, and it was the summer of 2007, which was another opportune time to be working on LBOs in the summer of 2007 in New York City, doing like M&A corporate law.
Which also probably became not so fun.
Yeah, it was it was like, I just graduated high school, and I was interning at a big Silicon Valley firm with a New York office, and was working alongside, like, it was me, and then like I was sitting next to this girl who was like a couple years older than me, whose dad was a partner there. And it was like, look, my dad's friend was a partner there, right? So it's like, and my job was really to be like a financial analyst more than anything else, where the TXU merger was like collapsing. The lawyer I was working for was a very talented, really business oriented lawyer, which there are not many of, in my opinion. And we were trying to figure out how this housing collapse was going to affect this technology company, service technology company merger. They're trying to do an LBO with a hedge fund, and it was actually an activist hedge fund and a private equity fund that were looking at taking this company over. And my job was just to try to like stay up with the news. And it was like, again, I really didn't quite understand like the magnitude of what was going on or what the impacts would be, but I also like, I was 18. Like, I don't knock myself too hard for that. But, you know, I was there and I saw it and I remember it and the feelings of it. I also very much realized that at that point, I did not want to be a lawyer. And, you know, I think part of it is like, this is all pre-high school still, but it's like, how do you learn? Right. And then how do you do stuff with that learning? And I think that's what most interesting jobs are. And for some people, being a lawyer is very interesting. I remember the associates there that I was working with, and I would leave the office and they would have like 2 stacks of paper on their desk. And it was like a Simpsons thing. It was, it was like one of these cartoons where it was like, there was a huge stack of paper on one side, and then you'd come back the next day and it was like just shifted over to the other side of the desk, And I was like, these people spend so much time proofreading, and I'm not good at reading, and I don't learn by reading, and I don't like digging through a sea to find like one little thing. It's just not my motion. It's not what I like doing. And I feel very grateful that I had that internship when I was 18. Otherwise I might have made the mistake and gone down that path, which is just would not have been well suited for me.
I feel like that aspect of just like you hate proofreading and learning what you don't like and learning what you do like connects to your time as a kid with the stocks, where learning has to be fun, right? And you have to have skin in the game. And if it's not fun, if it's not engaging, you're not going to stick to it. And you stuck to stocks, for a whole bunch of years because it was fun, it was engaging. And if you're not going to find that fun as a lawyer or whatever it is, you're not going to do the work because it's dull, it's boring. And that muscle that you were talking about earlier, which is, when you said, I love this, by the way, I really love this. When you said as a 16-year-old, you learned how to Google, that muscle is incredibly valuable because it's just like the mindset of, this is a muscle and it needs to be trained. And if I don't know, I'll start searching. And there is some kind of MO of how to search. And the first step is having the mentality that, you can search, you can find things, you can do market research. And then that summer in the hedge fund, when you're doing that, you're learning how to Google, but you're also learning there are other things you can do. You can physically go down to a retail store and count and kind of get a lay of the land. And so there's this whole learning how to learn muscle that you've been training.
Yeah. And to me, what I've realized more recently is it all frankly goes back to the scientific method. And we hear a lot, especially now from a political perspective, about science. And contrary to like how it gets talked about, like science is not a religion. It's actually a method. And, the method is you make an observation, you develop a hypothesis based on that observation, then you design an experiment, then you carry out that experiment, you observe that data, you draw conclusions, and then you repeat the process. And that is the scientific method. And experiment design is what scientists do, right? That is the art of science, you could say. It is like the ability to design experiments and say, I observe this, I want to check this or understand that better. So now how am I going to go about finding the information, recording what I need to record in order to get more clarity on that thing without introducing, I remember always in like science labs, it was always like, all right, where's the systematic error in our lab? And we always had to identify it. And that was also such a valuable skill to be able to poke holes in what seems like it is in theory objective. But it's clearly not, because there's systematic error that gets introduced or bias. And being able to work through that, really, I don't know, that's just kind of how I approach everything.
Do you think that has to do with why the degree in mechanical engineering hasn't changed that much between when your dad took it and when you took it?
So it's, so it's interesting because engineering and science are different. There's definitely overlap. In high school, when you take science classes, I feel like they're actually more of almost like a blend of engineering and science, because in science, I always think of it much more as like slightly more disconnected, esoteric research, and engineering is much more oriented towards problem solving and building, getting the building blocks of how things work. And that's really what you're doing in like high school science classes. You're not doing like research. And when I went to college, I actually originally wanted to do materials science and engineering. And the reason for that was, and in high school, I really liked chemistry, but I had no interest in doing organic chemistry and hanging out with pre-meds and memorizing a bunch of formulas. And so I was like, oh, there's this thing called material science. And like, I had met material science professors. Turns out, pro tip, like some esoteric major that high schoolers don't know about, if you go just on a college campus and knock on a professor's door, like, and be like, yeah, I'm interested in this major. And they're like, wow, you're 17 or whatever. And you're like, are interested in my thing. And like, they're like, all of a sudden there's a note in the admissions department being like, oh, I want this kid in my program. And that frankly worked at 2 schools. I mean, I don't know how much of a difference it made, but, you know, and then the reason that I decided not to do material science and engineering is that it's programs are very widely. So like the MIT material science program is much more about like solid mechanics and material design. And the program at Stanford was much more science, much more nanotechnology, which to me, like I need something tangible. And that was just too far out. I did like remember the beginning of sophomore year, I took like a seminar where it was like a 1-credit class and they would just like come and present research. And I fell asleep every week. And that was when I realized like, I can't do this. Like it's too boring. And then at the same time, as part of a prereq for material science, I took mechanics. It was a class called E14, statics, mechanics. And like we built a balsa wood bridge and like tested it and like measured all those forces. And I was like, wait, like this is what you do in mechanical engineering? Like I was like, yeah, this is great. Like I'm good at this. Like I can build stuff, take stuff apart, understand intuitively how things work. Like, you know, I have a knack for that. Like, why don't I just do this? Because I had always associated mechanical engineering more with physics, and I didn't like physics. Like I didn't like physics in high school. I didn't like the physics that I took freshman year of college. And then I realized that like in mechanical engineering, again, programs vary, but like Stanford was super hands-on and I'm good at building stuff. And frankly, a lot of other people were not. And so I had a huge advantage there where like we'd be in a team of like 4 people and like 3 of them were still uncomfortable using a screwdriver. And I was like, great, yeah, this is how the stuff works. And like, I just had like intuition around how to build stuff and make it function. And it was a lot of fun. And so I switched and was like, I'm gonna do mechanical engineering. And yeah, it was, and frankly, people asked me, it was just like, it was the easiest major for me, I think. I don't think, you know, like frankly, like economics did not come intuitively to me at all. I took it freshman year. Like the amount of reading that you have to do in English or history would have been really hard for me. I took one history class and like, just crushed me. Like I can't read a book a week. I read so slowly. And like, I learned in class. Like I probably could have gotten away with not owning textbooks in college just because I never read them. I was like, I had a guy who lived across the hall from me, freaky smart guy, never went to class. He was like a big frat star and was a genius and never went to class. It was great. You have people like this at Stanford all the time. And he would just be like, I'll just read the book. And then he would go in and like ace the midterms. And I was like, no, that's not how I learn. Like, I'm going to sit in class and have this professor and then a TA like explain it to me. And that's how I learn. And so I never read the book, but I never missed class. Like I really never missed class in college.
It's actually sounds in my head very similar to the stock picking, where you're learning by doing, right? In at MIT, one of their flagship courses is 2007 or something like that. It's called Design and Manufacturing, and it sounds very similar. And I've read some books on this course where they analyze how instead of teaching people the principles of physics, just have them build something that implements those design principles, and that's how they learn.
So we had a saying, I don't know if I can, we had a saying at Stanford, which was what do all Nobel laureates have in common as professors? They're all horrible teachers. And now to be fair, I had a couple of physics professors. One of them was not a Nobel laureate, but he was kind of in that world. And one of them actually was. And the one who was a better professor than the other one. I don't want to say names. That's why I'm being like so confusingly vague. But, you know, it goes back to what you say. So I took physics 43, I think it was called mechanics, winter quarter freshman year. And I got a C. And like, I'm coming out of prep school. I hadn't gotten anything below an A like my entire life. And I get a C in physics. And it was like, the head TA was kind of a jerk, and there was one midterm and section was optional, and my TA was not, he just wasn't that helpful. And, you miss one problem and like you're toast. It was like in mechanics, they teach you F equals MA and all these different things, but they also teach you like planetary bodies, which just wasn't intuitive to me. So fast forward like 3 years, and I retook physics 43 as a senior. Winter quarter senior year, I took physics, and because you could retake classes. So I retook it, and it was really funny because my TA was actually a first year grad student in mechanical engineering. So I think we had other classes we were taking together and a bunch of mutual friends. And he was just 1 year ahead of me. And I had now done physics, mechanics at supersonic speed, in liquids, with air resistance, like all these things. And like I had built a bunch of stuff, and now I'm taking it again. And it was like just way more intuitive to me. And I think that's one of the differences between like how you learn engineering, or how I learned it, versus how you would learn science. And I found with math and science people, like the TAs and professors in particular, you could kind of put them into a few different buckets. There were the people that were, and frankly, like we'll say this is like the top half of the 2x2. So you have the people who are really smart and understand things, and then the people who don't, right? So we're focused on the people who are really smart and understand things, because they're probably not professors or grad students at Stanford if they don't. So you can bucket them into like a couple different categories. So one is like kind of the standard, especially in math and science, which is like the genius, where it was like their ability to think in 6 dimensions and solve linear algebra problems just like came to them when they were 14, and so now let's split that group of people into 2 buckets. There's the people who just cannot understand how anyone else could not understand this. And they're like totally unhelpful, because they're like, what do you mean? You just do it. Like, no, you don't just do it. I'm not as smart as you are. Like, I don't get it. It doesn't come intuitively to me. Like, I'm a very visual person. Thinking in 6 dimensions is not something that I'm good at. And so you have those people, which is honestly a lot of TAs and professors. And then you have another bucket of people who I remember in physics 43, electricity and magnetism, which is a lot less intuitive than mechanics. The TA gets up, he was a first year grad student in physics, and he says, look, I took this in high school. I had no idea what was going on. I took it again as a young undergrad, and I sort of thought I got it, but I didn't get it. Then I took it as like a senior in advanced physics class, and like sort of started to get it. And then as a grad student, I took it again and feel like I'm like in it now. And that's how he started section the first day. And he's still one of the best TAs I've ever had, because he could as someone who actually, I don't know if he was just faking, but like as someone, he like went to Yale undergrad and like Stanford for physics PhD, and someone who had to actually learn it, he was able to then remember and teach it. Now, there are people who had to fight through it and learn it, who forgot what it was like to not learn it, and they're useless. And then there's the people who, they are such geniuses that even though they got it instantly, they understand it so deeply that they can understand how other people might not understand it. And I think I had 1 or 2 TAs like that. The bulk, especially in math and science, were people who were just geniuses. And you had a few kind of like gems. And then 1 or 2 like people who just weren't that smart, that kind of fought their way through it, but had no idea how, and they couldn't teach it over. So anyway.
I think it's called the curse of knowledge, where once you know something really well, you don't relate to people who don't know it, and you can't teach them as well because you're swimming in it. Like, you're so wet, you don't even remember what it's like to be dry.
Yeah, and I actually think that that's a skill that some people either have or they don't have. Like, remembering what it was like to not understand something and go through that process of learning it, which is honestly, I think can be a fairly painful process of actually like opening up your mind and feeling stupid for what might be a minute and might be a year to learn something. And so a lot of people kind of black it out. And I think something that I've done decent job at is like remembering what it's like to not understand things and like really be able to go back to the basics with things like basic physics and like accounting and finance and things like that. And a lot of the stuff that, again, you know, I'm lucky that I was able to just really internalize it, but I can zoom back and say, here were the things that, at least for me, were not immediately intuitive. And I either needed to figure out, fight with, have someone explain it to me well before I actually got it. Like, to be honest, I used to not really understand that stock prices were arbitrary. I didn't know that. And again, I could blame this, that, or the other person for not like explaining to me that to me clearly, but also I was 11, so who cares? And understanding like the value of a business, which again, if you go back and read like Charlie Munger and Warren Buffett, like that's one of their pieces of advice is ignore stock price, you know? And when I still keep comps, especially for software companies in the public markets, I'm like, I don't say, oh, Salesforce is expensive at, I actually couldn't even tell you what the share price of Salesforce is, but I can tell you what the market cap is. And because that's what the value of the business is. And you want to, again, this is something going again back, something that I realized that there were aspects of finance that I really liked. The kind of simple, quick, analytical approach, which is kind of heavily based on intuition and understanding, that I really liked. The aspect that I didn't like about investing and picking stocks was the gambling aspect. Like, I don't like gambling. I've never gambled in Vegas or anywhere else. Like, I don't enjoy it. That feeling of like not knowing and like rolling the dice, you know, spinning the roulette wheel, whatever. I don't enjoy it. And I was only much later like able to split those two things apart. Like when I was in college, then I was like, oh, I want to go do sales and trading after I graduate. Like I was studying mechanical engineering, but like I basically knew I wanted to do sales and trading. And I wanted to go back into that hedge fund world. And then 0809 happened like my sophomore year. And I was fairly disillusioned because I realized that that whole thing was caused by people who looked like me sitting at trading desks in New York, right? Why were gas prices high? Because of a guy on a trading floor in New York, not because of what's going on in the Middle East or OPEC, you know? And, you know, I was able to kind of split those things apart. And, you know, it might sound fairly obvious, but then I ultimately decided to go into investment banking after graduating rather than going a more sales and trading route, because it was more about the analysis and the fundamentals and the companies and the value than it was about this price relative to that price, who's buying, who's selling, what's the bid ask.
Why is that the case in investment banking? Why do, versus I guess the broker side or the standard sell side or buy side?
It's a good question. Look, investment banking, again, generally like on the sell side of things, all you're trying to do is optimize and communicate value and connect buyers and sellers. I mean, investment banks broadly connect buyers and sellers, and they do that through a series of desks, they call them, right? It's often different floors in a building. And they do that in the private markets and in the capital markets and in, you know, between corporates and things like that. And that's fundamentally what you're doing. And on the investment banking side, frankly, it's a little bit of a misnomer. Because what, you know, you are representing the investment bank, but in like technology coverage, investment banking that I was doing, we were interfacing with the companies. And what we were doing was using our knowledge of what's going on in the capital markets and what's going on in the M&A markets and everything, and mapping that back to like understanding the business and what's going on for this company, and optimizing the value and the story. And I remember when I was interviewing for private equity jobs, I had already closed a deal. It was SAP bought SuccessFactors for $3.7 billion. And we advised SuccessFactors on that deal. And, you know, the typical buy side questions from PE funds and everybody is like, you know, how is it valued? It's just like kind of more of the similar sort of investment banking set of questions, just, you know, more involved. And Like, oh, so how did you value it? And we're like, oh yeah, we did a DCF and we looked at comps, and we looked at trading comps and transaction comps, and we used EBITDA multiples and free cash flow multiples and revenue multiples and 1 year forward and 2 year forward and LTM and and I'm like, yeah, okay, fine, that's like the technically right answer. But I was like, look, how did we actually get this arbitrarily high valuation for this company? Right? Like, there were two things that happened in this deal that mattered. One was a slide that I made. I called it, and I used to call it arts and crafts. And in investment banking, we used to do arts and crafts. And what is arts and crafts? It's when you put 100 company logos on a slide and you arrange them so that they look nice. And we call it arts and crafts because it was like such a joke. It was like, working at Morgan Stanley doing finance and M&A and IPOs and debt. And like, what are we doing for hours and hours and hours? Like, arts and crafts. There was actually at one point where we were designing something as like a gift for a company that we had worked with. And my friend that I was working with was literally like cutting out pieces of paper with scissors and like covering up parts of this frame. I was like, you're actually doing arts and crafts. And this guy was like, it would have been like a great meme. This was like 2012. So I don't even think memes were such a thing then, but it was like, I like sent it out. It was like 4 years computer science at Princeton, 5 years in the Marines in Afghanistan and Iraq, 2 years at Stanford GSB, Morgan Stanley, arts and crafts. Like, he's an amazing guy. I was like, I can't believe we're doing this. But anyway, the point was that like the thing that really got this deal done was this slide. It was 2 slides, and one of them had all of these logos of SuccessFactors customers on one side, and then on the other side it has a bunch of SAP logos of their customers. And it was like, wow, there's not a lot of overlap here, and therefore the cross-sell opportunities and the synergies post-transaction are worth a lot to SAP. And really, it kind of removes you from the fundamentals of like how a stock picker would look at SuccessFactors. And then the next slide was the same thing, except instead of SAP logos, it was Oracle logos. And it was like, okay, do you want them to have all those customers, or do you guys want all these customers that you can then sell the rest of your suite of software into? And that was hugely impactful, like, of how the deal got done. And then
it's a simple message, like it's a powerful message in a simple format that really lets people, at Alp, we spend a lot of time on information chunks because people can only hold so many chunks of information in their mind at once. The simpler the message, the more information you can hold. And whereas EBITDA multiples and revenue multiples and DCFs have merit, but at the end of the day, like, this is something where people get it, and it's like, there's the story. It's in one slide. It makes sense.
Yep. And then it's a conversation that we had no party to, which was, it's comical. The bankers make all this money, and you realize that, like, I still remember we were on this call. I think now this was 10 years ago. So I think it's okay to talk about it, but like, we had this org call, and it was like some of the board members from the company and like our whole M&A team at Morgan Stanley. And we're on this call, and like, we're waiting for the CEO to join. And we had just put together like a new set of like 30, 40 pages of materials on all these different ways of doing comps and why are we like this and we're not like that, which is, again, a very important skill for this sort of stuff. And we're waiting for the CEO of the company to join the call, and he just pops on. Hey guys. And it was like, he had like a bad signal. And he was like weirdly loud. He goes, hello. Like, he's like, I got 40. And it was just like, books closed. Like, none of this stuff matters. And it does matter. And I do believe that you have to understand the fundamentals. It's like, this is something I've been saying recently. Like, in order to write good poetry, you need to learn grammar first. Like, in order to break the rules, you need to learn the rules. And that's the difference between art, which was done with purpose, and just like an accident. Like, oh wow, that's a cool design, I just spilled paint. Like, that's not art. And so anyway, yeah, you still have to understand the fundamentals and be able to frame things, but those things that really push stuff over the edge tend to be in a different, a more creative lens.
So maybe tagging on to that thought of you have to know the rules to break the rules. I'm gonna jump forward to another learning environment, and
I didn't answer your question about like sales and trading versus investment banking. But
well, I think the main idea was that investment banking is more about analyzing the company in terms of the market cap and like what's its actual value, what's its future value. And it's those fundamentals that spoke to you much more than the sales and marketing side, or just kind of
the
convincing
marketplace
people.
side of it.
Yeah,
What's
exactly.
someone willing to pay for this right at this very moment?
Exactly.
They teach you when you're in investment banking training, like you're going to work on an M&A deal for a year and you guys are going to make like $20 million. And then someone's going to do a block trade and it's going to get messed up and you're going to lose $20 million in 5 minutes. And you're like, wow. Okay.
Well, it goes back to what you said you liked, which was the kind of the more fundamental side versus the speculative side.
Yeah. And
right.
I guess just to tag along to that, like people used to ask me, I mean, I still get asked all the time how I went from engineering to investment banking. I hope by now it's pretty obvious, but there's a couple things that I realized. Stanford doesn't have a business major. They have a management science and engineering major, and they have an econ major. And when I was doing recruiting, I would always ask people why they studied econ. They said because they wanted to go into finance. And I was like, that doesn't make any sense. That's like, saying you studied physics because you want to be a mechanical engineer. It's just like, yes, they're related, but like they have a fundamentally different view of the world and goal. And, so people ask me like, well, what were the classes you took that helped you prepare most for investment banking? And so I took a class called Econ 90, which was financial accounting. It was case-based accounting. So it was like very practical. Our final, they literally gave us a 10K and they asked us a bunch of accounting questions. It was like the best possible prep you could get, like for investment banking versus like these. I felt bad for the kids who sat with like 3 years of accounting classes in their like finance programs at other schools. And then they like show up and they're like, this is all you need. I'm like, oh yeah, I did 10 weeks of that. I'm good. And then I took another class, which I actually didn't take the prereq for, and somehow I got in anyway. It was a Stanford GSB class called Finance 335, like valuation theory, governance, and something else. And that was a great class because we actually learned the theory behind like WACC, right? And I still remember, I'll never forget this. We're talking about the risk premium. The market risk premium in the WACC equation.
Just WACC is weighted average cost of capital for WACC.
Weighted average cost of capital. So the professor who was like, first day, he was like, look, I'm a financial economist. I've never worked a day in my life. I'm an academic. You guys know more about how this stuff works than I do. This was a second year GSB class. So a bunch of like private equity and hedge fund people like in the class. And so this guy goes like, the professor asked the whole group, like, what is market risk premium? And if it's part of the equation that represents, I'm not going to teach the capital asset pricing model right now, but, and this guy just raises his hand from the back row and he goes 5.5%. And everyone kind of laughs. And it's because like, obviously the professor was asking like, what does it represent? Like, what does it mean? How do you calculate it? And he was like, it's 5.5%. Everyone kind of laughed. And the professor was like, and he kind of knew it was a joke, but it was like, well, why? And he's like, well, I worked at Goldman for 5 years and that's what they told us to use. It's like, but then we learned how it actually works. And then sure enough, at Morgan Stanley, there's one guy who's like the financial economist for Morgan Stanley, and he has a small team and they send out a page of like, this is why we use 6. Morgan Stanley, I don't know what they use now, but 10 years ago, they used 6. And so that was a very interesting class, doing case studies, learning about how different things were valued and governance and how all that fits in. That was an amazing class. And then so that was from more of like a content perspective, those classes were valuable. But the one class that was most helpful for me from a method standpoint was actually a class called ME 140, which is Advanced Thermal Systems, also known as rocket science. And it's the capstone engineering, like mechanical engineering class for undergrad on the thermo side, but it has like 11 prerequisites, this class. And you basically like learn how a jet engine works and model it and run an experiment on it. Same thing with like a fuel cell. And then you actually do the same thing for a rocket. And then you have to design and manufacture a rocket and run it and measure it. And it's like a competition, which we won, which was hilarious because we weren't trying to win. We were just trying to get done. We took it as seniors, a couple of friends and I, because we went abroad the same time junior year. but it was mostly juniors. And so we were kind of like, look, we know we're going into like consulting and banking. Like we just got to get through this class. And we ended up winning the whole thing. And the reason why was that we just kept it simple. And we're like, our tools are from the 50s. We're not going to model like super hot, turbulent, supersonic flow in 2 weeks using like basic MATLAB when people at NASA have been trying to do this for 30 years. Like, let's just get reps in. Like the materials are cheap, the tools are raw, like experiment, like learn what works, what doesn't. And anyway, but the reason that class was so good is that what we would do every week is we'd run an experiment, we'd learn a concept, we'd run an experiment, we'd take a bunch of measurements, then we had to build a MATLAB model and write a bunch of code to figure out what was the ideal, where were the inefficiencies, what did we actually get, and then we had to write a report on it, like which was a mix of like words and charts and things like that, and basically had to pull an all-nighter every week to make that happen. That's basically what an investment banking analyst does. Get a bunch of data.
Yeah,
say how. Say
how.
Like you get a bunch of data, you build a model, you put it in a presentation with a mixture of words and charts and other, diagrams, and you're making a point of like, well, this is why this is that way. And you usually end up pulling all-nighters in the process. And so from a method standpoint, that was definitely the most valuable. The last thing I'll say on that was that for me, what I realized I didn't want to be an actual mechanical engineer was that, when you're learning mechanical engineering, you're learning something new every quarter, 3 things at a time, 4 things at a time, which I loved, and it's all building on top of each other, right? You like take one class and you have a prereq and another class. And like, it's like I was saying, ME 140 had 11 prereqs. And so it's building, and it's all like, I'm taking heat transfer while I'm taking like dynamic systems. And it's just these different disciplines that are all kind of related. And when you actually do mechanical engineering, again, I don't want to make blanket statements here, but in a lot of the roles that I was looking at, because frankly, I wasn't a good enough engineer to get like the really cool jobs, you're doing like one thing for like 2 years. And it's basically the same function. And yes, you're pushing the envelope, but it's very slowly. Whereas like when you're learning it, again, I'm like, I was the master prototyper. I'm like, this thing's got to work once. I'm good at making things work once, like that's not what a mechanical engineer should be doing in the real world. They're not designing things for things to work once, like you certainly hope not. And so this idea of like in banking, where I was working with software companies and semiconductor companies and internet companies and doing debt and equity and M&A, and like, it was all kind of fundamentally related, but all these different manifestations that would build on each other. And you work on one semiconductor thing, and then you work on another one, and you work on one software thing and another one, and it starts to build and you start to learn. And that to me was actually like, I don't see how there could have been a better prep for, I'm not going to say for anyone, but for me. Also, like, again, I still think mechanical engineering was probably one of the easiest majors I could have done just for me, even though it was considered a hard major, because we built a lot of stuff. We worked in a lot of teams, and it was fun. So
this is where I think the method comes in to play for a lot of people, much more than we usually think. We usually think it's all about the content, but really it's the learning muscles. It's how we do it. I took a few coding courses a few years ago, and the muscle of staring at a blank piece of, just a notepad or whatever you're starting to write in, and starting from scratch and knowing, oh, it's blank now, but in 25 minutes, in an hour, it'll be full of text. And that muscle of just knowing where to start, that's the method muscle. That's so valuable.
Yeah, absolutely. I think, again, especially as like computers do more and more, the ability to memorize stuff is just, again, memorizing concepts, internalizing equations, not memorizing them, right? That's valuable. But like memorizing, I don't know.
And being able to take things cross-domain, right?
Yeah.
Like that method that you learned in ME 140 to investment banking, which is something that, no computer model will do, right? But it's having the information internalized well enough so that you can do that.
Yeah. And being able to delegate and debug and come up with the right ideas and present it well. And like those methods are super, super valuable. We're going to see like a new rise of the generalist. the cross domain, cross functional expertise. I heard someone explain it nicely once. They said, look, if you're the top 20% in field A and you're the top 20% in field B, and you can figure out how field A and field B relate to each other, and that's actually valuable, then you're like the top 0.1%. And now you can do really important stuff. And I think that, again, there's people you don't want to be the jack of all trades and the master of none. Turns out that, and I think that you can see this in a lot of manifestations. Again, it's hard to really make very broad strokes on this, but being the jack of all trades and being able to do everything is the master of being able to do a little bit of everything. And if you find the right way to apply that, then it's super, super valuable.
There's a book that came out exactly on this. It's called Range: Why Generalists Triumph in a Specialized World. I think it's written by David Epstein. And it's literally the case you just made, where over the past 20 years, 30 years, 40 years, we've all been going nicher and nicher and nicher. And now there's actually a lot of space for the generalists. And, in the world of technology, that makes even more sense, because the nicher you are, the more someone can build a model for it.
Yep. Yeah, exactly. They said, they told everyone, go learn how to do this. I was like, well, if everyone does that, then inherently is lower of a value. But I think that the ability to be cross-functional across a few domains with intuitive understanding is super valuable. But I will say, I have met generalists before. Like, and there's a big, maybe we'll name it. There's a big difference between a generalist and a Renaissance man or woman, right? Big difference. And I
wait, what do you mean? What do you mean?
It's like, I always pick out the guy in Office Space, who he's getting interviewed by the Bobs, and they're like, so what do you do? And he's like, well, I connect the engineers with the customers. Like, well, so what do you do? He's like, well, I bring the specs from the customers to the engineers. He's like, so what does that involve? He's like, well, I don't really do it. Like, my secretary physically does it. But, he's like, well, they can't interact with each other. They can't talk to each other. Like, they need me in between. And like, you just see this, like, this guy actually does nothing. Now, you could imagine there's a world where being able to communicate between different groups of people actually is valuable. But I've certainly met people who they're just like, they're administrative assistants. You see it, people like, oh, it's the COO of the company. And you're like, you're an admin. Like, I worked in a company one summer. It was like a student company in college. And the CEO's job was like to get cell phones for all the salespeople. It's like, what? Like, my job is to like create a back-end business process so that once the salespeople make sales, it can actually physically turn into what we're producing. And then the salespeople get compensated properly, and it'll all get driven through the accounting system properly. And like, that was my job, to set up that system, which I cleverly designed myself out of, but I designed the system, and there's something to that. But yeah, so I think that if you're not going to be the top 1% of a certain specialty, it's very risky to specialize.
Yeah. So I'm completely jumping ahead, but I think the generalist aspect really plays in well, which is you are now an early stage investor, and you are a generalist early stage investor, right?
Yes.
So walk me through that. Like, why generalist? Does it connect to what we just talked about? What do you think are the puts and takes of being an early stage generalist investor with a heavy duty background in finance and investment banking? Because they couldn't be more opposite, like IPO stage companies and pre-seed, seed investments.
So I'll tell you why I do early stage, because I do feel like I could operate at any stage. But I like early stage, and I like it for two reasons. The first is that it's more pure. There's less ego, there's less politics, there's less overhead and inefficiency and other stuff to worry about. And so it's really about that early stage. It's kind of like the prototyping I was doing in college, where let's just see if we can make this work. And then by the way, the fact that it's okay that it doesn't is also awesome. Again, you want every company, pretty much every company that I meet, I want to be successful. And obviously everything I'm invested in, I also expect to be successful. But knowing in the back of my head that it's going to be okay if it's not, especially in this environment, even for the team and the entrepreneur, that's great. So that's one reason. The other reason is that I think that the way I look at it is, and I was explaining this to someone last night, that, I like being able to not have to do that like gambling motion, where like if I was doing pre-IPO investments right now, and it's like, you're going to invest in this company and then you're hoping to get like a 2x, maybe a 3x in like a year, they're going to file to go public soon. And then it's going to take a few months and then they're going to go public and there's a 6-month lockup. And it's like, you're betting on multiples and like, you're betting on like macro, and it's completely out of your hands. Whereas I always like, if you draw a line, it's like, when I invest in an early stage company, I'm betting on them going from like 1 to 1,000 in terms of like, or let's say 1 to 100 in terms of share price. Whereas when you're betting on some of these late stage things, again, it's just a different motion where, a lot of the bet is that like, is this thing going to go from 50 to 70? And the factors that influence the thing going from 50 to 70, again, I'm exaggerating a little bit into the public markets, but the factors that are going to have this thing go from 50 to 70 are mostly out of anyone's control and even knowledge. Like, we don't really know what's going to happen with interest rates. We don't really know what's going to happen with like some of these risks out there in the macro space. And so again, I just kind of enjoy it. I like the prototyping stage where, again, if I think about it as like a mechanical engineering problem, if let's say you're fixing a power plant, you're dealing with like all sorts of, I call it operational inertia. And in this case, it's like physical infrastructure inertia. And when you're working with an early stage company, you're like helping build the foundation of something that can hopefully become a big rocking power plant down the road. But right now let's think down the road and what can this look like, and then map that back to what can we do now efficiently and quickly to kind of increase our chances of that becoming a reality.
So the generalism, I guess, plays in, you mentioned a few things, right? Like
so why generalist? Why not like focused? So there's a couple of reasons for that. I'm not completely generalist. I always tell people I'm very narrowly and specifically focused on things that I'm interested in. And that's a blessing that I get to do that. I don't feel the need to have to dive into something that doesn't get me excited and become an expert on it. If it doesn't, I do that, but I only do that when I'm like, wow, that's really cool and exciting. Someone sent me a thing in like the telecom space, and I'm just like, I spent a little time there. I know it's hard. I know there's big opportunities, but like, it doesn't light me up. I'm not jumping across the table, and I don't feel I have the need to do that. And so, okay, I'm just happen to be interested in a fairly broad array of things. And I also think I have the humility to know that I don't need to, nor should I be the expert in things that companies are doing. And I think if you talk to a lot of great early stage investors, they invest in entrepreneurs, they invest in big ideas and things that will become big markets, even if they aren't now. And you're betting on a person and their ability to navigate the development of something that may or may not happen. And if I feel like I get it and I know it, it's pretty tough to do that. And so, you have to have an angle. Like, I am pretty opportunistic, but my angle is business model innovation. So I guess you could say, what do I focus on? Business model innovation in areas that I'm interested in. And so I group the areas that I'm interested in into two buckets. There's the stuff that I know really well that I've just spent a lot of time around. Either I've invested in companies in the past and watched them and learned from that way, or I've worked inside companies as an operator or as an advisor, and been a user of this, that, or the other thing. And I understand that there's an operational gap to fill. And so those are kind of that's the stuff that I understand. And there's stuff that I don't understand as well. Or sorry, in the stuff that you understand, there's also like business model plays into what I would call relatively intuitive markets that are like very large. Things like most of that stuff, frankly, comes into the consumer world, where it's like you would be a user of it. And I think that those sort of models have actually generated some of the largest outcomes of the generation, where they're not core tech plays. They're not enterprise, like solving some big thing. Look, there's plenty of big wins there. You look at like a Snowflake, a ServiceNow, things like that. But if you look at an Uber or a Netflix or a Zoom, they packaged somebody else's technology in a clever way to serve a need in the market through an innovative business model where they're applying, kind of like this for that and pulling things together in a way. And that, again, is innovating on business model. And business model innovation is pretty broad, right? It's everything from product to pricing to customer and stakeholder alignment, to figuring out new ways to make money off things that previously people didn't get paid for. And that's just, there's a lot there. And then there's the areas where, again, let's say I'm interested and I know that it's big, but I'm not an expert and I think it requires expertise. And so a great example of that would be DevOps or cybersecurity, where I understand the opportunities there, but I couldn't tell you why something won't work. And that's what I have my network and my friends and my venture partners that I lean on for, because I had a deal recently that like came through a really good friend. They were leading it. They were bringing me in to participate. And met the CEO, liked him. And I was like, this sounds cool. I get the need. And then when my technical like venture partner friends talked to him, they were like, we don't think this holds water. I was like, okay, great. Like I had a clear gap in my thesis development that I knew how to fill in an efficient way. And I was able to, and I got a very clear answer from them. Now, this company still may go on to be super successful, but we have to work with the information that's in front of us and learn to rely on other people and those experts. So long answer for like kind of why I'm a generalist, I guess.
Well, business models are generalist by nature. So it's not, there's some VC firms, that do deep tech. There you can't quite be a generalist because you have to understand the deep tech. But I'd say for business model innovation, you have to be a generalist because you have to be sucking in from those different worlds that you mentioned.
Yeah.
Right.
And there are certain areas that, like, again, I'm sure there's business model innovation in spaces that, again, I'm either just not excited enough about to go learn on, or doesn't make sense to me. And that's fine. And I'm okay with that. And then there's other areas that they jump off the page. And like I wrote a post recently about, like, I call it like the go-to-market menu, where I was like B2C, B2B, B2B2C, B2C to B, and then I go into B2B to B and C to C to C, and like all these different methods. And like it's kind of meant to be a joke, but being able to think through those methods and understand enough about what are the stakeholders in an industry, and if I can get clarity on who's really doing what, then, and sometimes I already know it because I am familiar with the industry, and sometimes I'm not. And it's all about efficiently figuring out, like, does this stakeholder alignment actually make sense?
It goes back to, I think, the stock picking, that the learning has to be fun. Like you have to be investing in what's fun. Otherwise you're not going to be interested.
So we can use this as a segue, but there's a rabbi, a very wise rabbi that I had the opportunity to learn from for a while, and very, very masterful at giving over things that are simple and memorable, which actually then makes them useful. And one of the things he said is that, like, if you're not like happy, then you can't be settled, and therefore you can't focus. And generally it requires focus to like solve hard problems and figure out complicated things and make tough decisions. So if you're not like enjoying something, then it's not like, I'm kind of like, don't force it. I don't feel the need. I'm lucky that I have enough deal flow that I don't have to go looking for stuff that I'm just not naturally excited by. And then I also look back and put myself in my own shoes and realize that if I had just been like, that's kind of interesting, or those people are smart 10 years ago, I would have made a lot more money by now. So, kind of trust your instincts, I guess, is the other piece of it.
So learning has to be fun, and you've got to trust your instincts.
So there's one question that I'm happy to touch on that you'd mentioned, prior to us starting, which is kind of like the learning differences between like being at Stanford or being in Yeshiva.
Yeah.
And I think that the fundamental similarity is, I guess you could say, like indirect and direct learning, or passive and active learning, which there's a certain amount of learning that you do by just being in an environment, and you grow from that usually more than you think you are, because it's happening passively and indirectly versus like what you're doing in the classes. And so, yeah, at Stanford, I was like taking engineering classes and solving problem sets and building models and blah, 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 blah. But then I was also just like learning to interact with people and like building teamwork and building relationships and understanding what type of people do certain things and what works and what doesn't. And then in Yeshiva, again, I was learning Gemara and learning Chumash and getting skills and picking up content, but I was also in an environment surrounded by people that were just operating in a different sort of way, and that rubs off on you. And so there's definitely that kind of dichotomy in I think any learning environment. So yeah.
I think there also has to be, honestly, some background in what a yeshiva learning environment looks like. I mean, I've been to yeshiva. They vary, right? But I think for people to understand what you're talking about, they would have to get a sense of what that environment looks like, because it's very different than college or high school.
Especially for me and like my experience. So I went to a yeshiva for people who didn't grow up religious, who, was a lot of very smart guys who were in their mid to late 20s, and I guess early to late 20s for the most part. And like my roommate in yeshiva was a second year. It was a 2-year program. He was a second year in yeshiva and I was a first year, and we both went to Stanford. We literally never would have interacted at Stanford. We could not have been in more different worlds. And, to this day, we're close friends, and I learned a lot from him, and, our late night conversations about certain things. And I guess I read a book that he gave me while I was in yeshiva called Mindset. And if there's one thing that I found that yeshiva was just so different than the academic world for me, was that, especially in my yeshiva, the growth mindset was just very much fostered there versus the fixed mindset of like, the answer's right, the answer's wrong. Whereas it being more about the process and setting goals around process rather than achievement, and opening that up. And I remember I had like a major turning point where we were learning a commentary on the Talmud, my learning partner and I, my chavrusa and I, and we had gone through like these 5 lines like 10 times. And we kind of were trying to like just fit it into what we were doing. It's a very complicated, nuanced argument. And after like the 10th time, we looked at each other and I was like, "You think we got it?" And he was like, "Yeah, I think we got it." And I was like, "Okay, then let's do it again." And to use a term from yeshiva, I was like, let's slug it up. We think we got it. I'm like, look, we're both first year guys just learning this for the first time. There are people way smarter, way more knowledgeable that have spent way more than an hour on this thing. We are not at the bottom. And part of it is you have to have that reverence that you didn't get to the bottom or the top or whatever yet. There is more meat on the bone. And being willing to say, like, even though this is sitting in my head good right now, and there's a strong will to not mess it up, like not knock down the tower, let's go knock down the tower and rebuild it up again, because it's going to take us to a different level. And I never once did that in school. Never once was willing to be like, all right, I think I got the answer. Like, let's like throw it in the
let's try it again.
Like, no. Like that's the answer. Like, let's move on. Much more objective rather than, again, being more about the process. I couldn't tell you, this is the other thing. I couldn't tell you what it was about. Like, I still remember that moment. I could probably find it in a Gemara, but like, I do not remember what it was about. And it was probably, in hindsight, not that complicated. I've learned a lot since then, but that moment was like, I never had moments like that in college.
So just some background for those who are listening who don't know what Gemara is, or Gemara or Talmud. It's this corpus of basically everything in the Jewish body of knowledge from kind of the 4th century, 8th century, compended into 60 volumes, over 2 million words, in Aramaic / Hebrew. And so without punctuation either. So reading it, understanding what was meant is actually a challenge in it of itself, even just on the raw basic layer of understanding Aramaic without punctuation. And then when you want to understand what people were actually talking about and what they were talking about and what they meant, because people back then didn't have that many books, they didn't have Wikipedia, they didn't have hyperlinks, and so their minds work like hyperlinks, and they'll throw out 3 words, and you're supposed to know that those 3 words are actually referencing an entire other section somewhere else. So it just understanding it very well is a huge challenge. My experience, by the way, in Yeshiva was going from a high school mindset where it's very much goal oriented to Yeshiva, which is what you just said. Like there isn't quite a goal. There isn't, I got the answer, let's move on. It's much more about process, being in the moment, just being in a kind of environment and letting that seep in. Before you put it in as passive and active, for me, it was much more passive, which isn't to say that you're not doing active stuff, but just being there is part of it.
Yeah, you have to be involved to get the passive parts.
Right.
You can't be like sitting in your room the whole
100%.
time. You have to get out there and be in it. And, as one of my other rabbis would say, you got to get on the mat, and it's like, it's sort of like game day where you could win the 3-point, it's like, I just saw some clip came up and it was like, I forget the guy's name even, but like Larry Bird, like won the 3-point skills contest at some point. And then like he stopped doing skills contests. And then there was this guy from the Chicago Bulls, whose name I don't remember, who won it. And it was like, do you think you could beat Larry Bird? And he was like, Larry Bird knows where to find me. And Larry Bird's kind of retort back was like, yeah, at the end of the bench. Like this guy didn't play in games. Like, again, look, he was in the NBA, he's a professional athlete, but like you could have the best skills in the world, but there's something to be said for just being on the field. Like if you ask an NFL player, there's a difference between playing in a Super Bowl and not playing in a Super Bowl. And so I remember the idea of like getting the participation award and the effort award when I was like in middle school was like, that's a joke. And like, if you're participating and if you're putting an effort in the right place, then that alone is extremely valuable. And over long periods of time, that does result in achievement. And if it's done right, it results in a customized personal achievement, which is obviously the best sort of kind of intrinsic validation that a person can get.
Yeah. So Alex, where can people find you online? Because I know you do put out your thoughts, you do share them. Where can people find them?
I have a Substack called SaaS Engineering, which is just alexoppenheimer.substack.com. I also kind of cross post with Medium. You can find me on Twitter. I enjoy figuring stuff out. And I tend to do that through conversation. So I'm usually down to schmooze in case that's not obvious from this conversation.
And I think after this,
figure stuff out.
Yeah, after this, I think I've gotten a new appreciation for the name for the Substack, SaaS Engineering. But yeah, thanks so much for making the time to schmooze. This has been great.
Of course. Awesome. Talk to you soon.